Okay. Well, thank you, Nick, for joining today. I'm Jess.TeamPaladino with Shoreline, and I'm so excited to be able to talk to you about just the state of the market from a lending perspective today and some unique programs that buyers can explore and take advantage of to help them. But before we get into that, do you mind just introducing yourself?
Of course, Jess, I'm happy to be here. So my name is Nick Doucette, for everyone else who might be tuning in right now. I'm a loan officer at Blue Water Mortgage. We're based in Hampton, New Hampshire. I lend throughout New England, and that's really who I am, what I do. I work about 7 days a week in this industry, which is based around real estate. Of course, that's your side of the ball. My side is the lending piece. So that's a little bit about me, and yeah, take it from there.
That's great. So if you had to summarize the state of the market right now in 30 seconds to somebody from a lending perspective, how would you describe it?
So from a lending perspective, I would say that we have continued to see rates go up for the most part of 2023. We had a big event, which happened, I'm sure you guys have heard about this, COVID a few years back. COVID was like the heavy kid in the middle of the trampoline, keeping rates depressed lower than they probably should have been, which with some other factors led towards inflation. When inflation hit, rates climbed up to help to curb inflation. We've seen them climb throughout 2023, but we're actually starting to see them start to cool off a little bit. I think we're near the top of this bell curve of rate hikes.
Okay, yeah, that's helpful. And I know just from my side of things, with interest rates going up over 2023, combined with such a low inventory in Southern Maine and prices still remaining high, a lot of buyers and sellers, that are looking to sell and purchase a new home, just been having a lot of conversations about what are the opportunities in this market and how can they find the most purchase power, right? Because we haven't seen some big price drop yet. I predict that there will probably be some corrections, but not predicting some huge crash. So one of the things that I've been hearing is, okay, how can I buy right now and still be able to afford my monthly payment and get into a home I love? So I was hoping you could tell us a little bit about what a 2-1 buy down program is and what that looks like and how it might be able to help for the right buyer.
Of course, I'm happy to share some of that information. So the buy downs, guys, I'm sure if you've been around real estate or maybe you're new to it, you may have heard these terms come out. 3-2-1, maybe a 2-1 or a 1-0 buy down. What a buy down is a temporary reduction in rate instead of buying the rate down for the lifetime of the loan, which would be a discount point. So a buy down would be applied to in a 2-1 is for 2 years. In year one of your loan, your rate is reduced by 2%. In year two of your loan, your rate is reduced by 1%. In year three of your loan, it goes to the original qualifying start rate, which right now we're around 7.125%. So in that example, you would start year one, payment one, at 5.125%. Upon month 13, start of year two, 6.125%. And then upon month 25, you're going to go back to 7.125% if you haven't refinanced the loan prior to the 25th month. So these are good options right now because what the experts are saying is we think that rates are going to be coming down into 2024 and 2025, which would be a great opportunity to get in a home, have a big monthly savings using a buy down, and then refinance when rates come down. So that's a little bit about how a buy down works when you have you have completed one and closed on the home. In order to get into a buy down scenario, a 2-1 buy down is funded by a seller credit, which would be negotiated by Jess, your realtor, at the time of your purchase contract. So a seller credit is basically the seller saying, hey, we're going to give buyer X amount of money at the time of closing to cover closing costs, to fund a 2-1 buy down. That's how it takes place. So when your realtor, Jess, is at the point of drawing up your purchase and sale contract, your realtor and lender, Nick, will be communicating to make sure that the correct assets are there from the seller concession in order to cover that buy down.
Mm-hmm. So about how much money can people save doing this? I don't want to make you do quick math, but I know you were sharing a little bit, like if it's a $400,000 home with rates about where they at. right
Of
now.
course, yeah, not a problem. I'm a numbers guy, so I don't mind doing the quick math. So on a 2-1 buy down, you're talking of substantial savings. I'm going to use a very easy number to work with here.
Mhm.
Let's use a purchase price of $500,000. The buyer's bringing 20% down, their loan's 400,000. So in a 2-1 buy down scenario, you're talking about a monthly savings of $516 for year one, when your rate's 2% lower. Again, $516 a month, an annual savings of $6,203. Year two, a monthly savings of $264, annual of $3,173. Your total savings in that buy down scenario, again, purchasing a home at 500,000, putting 20% down, is around $9,376. And guys and girls out there, don't be afraid. You don't need to bring 20% down to initiate a buy down. You can go with as little as 3% down in a conventional loan and still access a buy down. The buy down amount is calculated by the loan amount, which would then dictate your monthly savings and how much is needed to fund it from the seller concession. I'm hoping that helps clear some of that up.
Yeah, it does. And, I think it's such a good opportunity because I hear from so many people like, I don't want to be house poor, right? I still want to be able to travel, or I still want to be able to do X, Y, and Z. I don't want all of my cash going into my monthly payment every single month. So this provides more freedom. And, or if you're purchasing a home that needs some work done to it, you could look at it that way of like, oh, okay, this allows me to hire somebody to redo the floors or do a kitchen because I'm saving that $500 a month. So many opportunities with this, and I really love that.
Completely agree. And another kicker of it, another benefactor of this program is, let's say rates do drop, right, down to the fives. Personally, it make my life a lot easier with all the conversations I have to have weekly, daily. But what's going to happen, guys, is if you refinance at that time, let's say you're at month 13, you still have a bunch of money in this escrow account that was funded at the time of purchase. All of that money goes directly to your principal and reduces at the time of refinance. That money doesn't just evaporate to the bank. We don't want to be giving the bank too much more than we already got to give them, right? Let's just make our monthly payments. But really, the best part of that is your loan is going to drop several $1000s if you do refinance it prior to the end of the buy down. And at that time of the refinance, now you're in a true 30-year fixed rate, probably lower than where your buy down is. Hopefully that's the goal of this.
And how much does a buy down cost? Is it a direct calculation in terms of how much you're saving by doing the buy down, or is it different? How does that work?
Correct, yes. So the technicality of what's actually going on at the bank level, when the home closes, right, you need a certain amount of seller concessions. That seller concession amount is the exact same amount of the total buy down savings. So in that scenario I gave you earlier, $9,336, that is the amount that you need to fund the buy down. So what's going on once the buy down is funded? At the mortgage servicing company, there's a little escrow account. The word escrow gets used a lot in real estate transactions. What the word escrow actually means, guys, it just means a separate account that money gets drawn out of. So when you make your deposit, your funds go in escrow. If you escrow your taxes and insurance, you put money with your servicing company, they pay you monthly. In a 2-1 buy down, there's an escrow account set up at the mortgage company. It draws out of that 2%, drops 2% rate year one, 1% year two. And again, it's your money. That's why if you refinance, that money inside that escrow account immediately goes to your loan.
That's great. And so say it's a situation really competitive, and it's not a situation where you can ask for any seller concessions because you're trying to be really competitive. Are there any other programs that you would recommend to people in those situations that want to try and take advantage of this type of program to have a lower monthly payment until they can refinance?
Yeah, there is. Specifically, my company at Blue Water Mortgage and myself as a loan officer, I have a program that's saying 1-0 lender paid buy down. So what that means, 2-1, think of it 2% the first year, 1% the second year. 1-0 in that same vein, 1% for the first year, nothing the second year. So in the 1-0 buy down, guys, the lender pays for that. So you don't need a seller concession to fund that. Let's say again in that scenario, your start rate is 7.125. Well, for the first year, your rate is at 6.125. That's a monthly savings of 263. Again, over $3,000 in savings the first year. Pretty measurable. We are thinking that rates are coming down 2024 into 2025. So hopefully around the time that month 13 kicks in on your payment, you're refinancing to a fixed rate in the low sixes, maybe the high fives. That would be the goal there.
Yeah, that is really amazing, and just helps people that are on the fence, that are considering, should I buy now? Should I keep renting? Should I sell now? Right? And
Yeah,
upgrade into a new home? Should I downsize? All of those things are at play in people's minds when they're looking at interest rates and what they can afford. So I think that's really great. Like, if anytime you can make somebody else's money work for you, seems pretty
exactly. And
good to
that
me.
one-off lender buy down, that program, I mean, that's truly money that you could have inside of your financing. If you're looking to buy a home now, why not leverage a savings of $3,000+ for a $400,000 loan? If your loan size is bigger, the savings is obviously great. If your loan size is smaller, smaller savings, but it's still proportional from a percentage standpoint. So it's a great program to utilize. And also any one-off buy down right now with that program, we're applying a $500 appraisal credit. So if your appraisal is $600 normally, we're getting $500 towards that in a credit. You pay $100. Traditionally, appraisal costs are around $500 to $700, depending on where your home is and the aspects of the home.
That's great. So, what's the best way for a buyer to figure out if a buy down is going to work for them? What would you recommend they do?
Well, I would recommend them to get in touch with me. I'd love to have a conversation. I really like to talk to you call them buyers, I refer them as borrowers, the client. I like to talk to the client on a call. I really like to uncover what are your biggest pain points or what are your biggest goals in a real estate transaction? Do you want more money in your bank account after you close? Do you want the lowest monthly payment? What's really it? What's the X factor for you? And also, what's the ideal home look like from a budget standpoint? Now, you're the best person to know where that home exists inside their budget, but my job is to understand their numbers and what they have for financial goals when it comes to real estate. Again, I'm a numbers person, I'm going to stay in my lane, but when you and I work together as a team, it usually yields the best results for the consumer.
For sure. And I think, just as a little plug, I think sometimes when I talk to people and they're not sure if they're ready to buy right away, they sometimes have some hesitancy about reaching out to someone like yourself, Nick. And my advice always is reach out. If you want to buy 6 months from now, a year from now, 2 years from now, there's really no harm that can come from having a conversation with you to understand what your options are today and what you can be doing to get yourself into a good position for when you might be ready. So, I know that you're always happy and willing to have those conversations with people. So that would be my little plug.
Yeah, of course. Sometimes people think, hey, I'm about to talk to a mortgage lender, a mortgage broker, a loan officer, and I'm going to get a hard inquiry on my credit report. That's not the case. We can just have a conversation. If someone knows their numbers, hey, I have this auto loan, I have this in student loans, I pay this in my credit card debt every month, and then I make this much, I can balance their debt to income ratio without ever pulling credit. We can kind of do like a preliminary step and get them more engaged to understand like, hey, I already pay $2,500 a month on rent. This is me building equity and is a feasible path to towards financial freedom, right? Like, because let's face it, you're about to get hit with 30 years of debt. Now, fun fact, the average loan is held for 7 years in America, but still building equity, whether it's through real estate, through business, building equity is always a good position to put yourself into.
Absolutely. And it's nice, even to boil it down more, just to have something to leverage, right? You got to
Agreed.
start somewhere. And, you're seeing some people that thought that they were buying high 3 years ago. They had people in their ear. I remember it, parents,
Yeah.
with first time home buyers at home inspections being like, this is not worth this. And they were already able to upgrade in the market. So you just never know. And it's always about your personal situation and goals. So, I really appreciate you taking the time to sit down and get on the Zoom recording.
course.
I hope that anyone who is just starting to think about buying a home or is already in the process of searching and thinks that potentially there could be some opportunity for them to save some money should certainly reach out to you and or me, and I can get them in touch with you, and we can figure out what the best opportunity is going to be for them in this market, whether it's a buy down or a different program that you guys offer, like the Lender 1L. That sounds really great.
Of course, yeah, I'm always happy to help.
Wonderful. All right. Well, thank you so much.
Thanks, Jess.